Love finances, the other F word, and want to support the show? Become a patron by going to patreon.com/FTOFW. You'll get special features, a shout out on the air, and early releases. Or if you prefer, pick up some merchandise at financestheotherfword.com.
As fantastic a CFP as Mel O is, as wonderful an attorney as I am, and as good as Stormy is at whatever it is he does, please do note that anything said in our podcasts are our opinions alone and are not meant to be taken as financial or legal advice.
Welcome to Finances, the Other F Word, a Gen Xer podcast for musicians and music lovers, where we discuss money and music without all the pretentious bullshit. Here are your hosts, Zoe Terry, attorney at large, Stormy Andrews, founder of Yokel Local Marketing, and Mel O, certified financial planner and author of Finances, the Other F Word. Listener discretion is advised.
Hey guys, welcome to Finances, the Other F Word, and holy fuck, we are so happy you're here. We have a ton of stuff we're going to have to get to today, and this is going to be a very financial heavy episode. You're welcome. And we're going to talk a little bit about what's been going on with GameStop, even though this is going to be not airing until a week from now. So it'll be interesting to see how that shakes up, kind of what's going on and some of the drawbacks of this from what I can see. But before we do any of that, we have so much exciting news. Oh, and then after GameStop, we're going to get to Bitcoin. But before that, we have so much exciting news. Zoe, tell us some exciting fucking news, dude.
Okay, well, we have a ton of new countries to welcome, first of all. So let me get started there. We welcome to the Finances, the Other F Word family to Angola, Zambia, South Sudan, Tanzania, Croatia, Myanmar, Cambodia, Ecuador, Nicaragua, Honduras, Paraguay, Guyana. I don't know if I said that right. I don't think I did. Panama, Dominican Republic, Guatemala, and Colombia.
Wow, look at that.
Yeah, that's crazy. That's the most countries we've had onboarded at one time. Now, granted, we're very blessed. We have a ton of countries that we're already in already, but this is the first month that we had that many countries come on board, so that was fucking crazy. And on top of that, the fucking coolest thing is that we got, what, Zoe?
We have our very first patron.
And
yes, we want to say a huge thank you and a huge welcome to Pauline K, who is our first patron.
First ever patron. We appreciate you supporting the show. A lot of work goes into it, and we appreciate it. So when we do our happy hour for this month, well, actually, I guess this month's over. When we do our happy hour for February, we will make sure that we get a toast to you, and we thank you for coming on board. If any of you guys are interested in sponsoring or being a patron, you can go to patreon.com/FTOFW podcast. There's also a link on financestheotherfword.com website, and we do appreciate you. We are going to, since you're very first, we're going to be sending you a package in the mail. I just got to get it together, so I'll let you know when it's on its way, but I haven't done it yet. But I'm going to do it, but I haven't done it yet, but I will. So, okay, before we get into...
Wait, we're sending packages in the mail?
We're sending packages in the mail. We've been doing that.
Wow.
Yeah, are you
How about that?
Are you surprised that there's a mail system? I don't understand what's
for something smart ass to say. I just couldn't come up.
I know, and you do it all the time. I think you think you're funnier than you are. I think that's really what the problem is, because you always do that. You always start to say something with no punchline.
But that's the but the problem is, or the issue is, I realize I'm not funny, but I keep getting up to bat.
Yeah, I mean,
Yeah,
you know what?
I
Just
do.
like all those girls who keep telling you no, you got to just keep doing it. One of them will be drunk enough to finally say yes and give you some action.
There it is.
So,
There it is. We've got more countries.
yeah, we got more. Look at that. Just Stormettes just charging finances, other F word. He's going to be.
They all want a piece of the storm.
They do. He's going to be.
Let me at it.
He's going to be global. He's going to be slinging that dick
yeah.
globally. So anyway,
Whacking it about from one end of the earth to the other.
just all over it. I just had a horrible visual.
So did I. Oh, God, please stop it.
Same here. Stop it.
Yeah.
Let's get to the show.
We're done with
Let's
it.
get
We're
to the
done with that.
finances.
Okay, let's talk real quick about GameStop. I've done a couple videos on TikTok. People are disagreeing with me, and that's completely fine. If you have not been dead in a grave, even if you don't, or even if you don't invest, you know that GameStop, AMC, now American Airlines. We just did a money news on that, is on the radar. And there is a Reddit forum called Wall Street Bets. And there is hedge funds that short positions. And when you short a position, that means you're betting against the stock. And what happened is in 2008, since the market kept going in the shitter, there were so many people short selling that they ended up having to come in and they froze all short sales for a couple months at least. I want to say maybe it was around 4 to 6 months. I can't really remember. But the reason why is because all of these hedge funds were getting rich off of these short positions, forcing the stock down even farther. Because if a stock starts going down and starts dipping, it's due to some of the fundamentals. Either there's a change in the sector, there's new technology, they can't keep up, there's a variety of different things. And so what we start to see is a decline in the stock price. And then what happens is that as they see a decline in the stock price, they have some analytics and they go, okay, we're going to make a bet that if it drops to XYZ, this is how we're going to profit off of it. So what happened is the forum got together quite ingeniously, to be completely honest, and said, hey, all these positions are shorted because this is public record, so let's go in and start buying them. So what happened is they all got together and they started buying the positions and they started running the price of GameStop up. Then what happened is that at some point what happens is that the bets that the hedge fund has made, it crosses the threshold and now their ass is on the line and they have a big open position where they have shorted the stock and the stock is moving against them in a really, really big way. So in order to cover the position and cover the bad bet, they have to go and actually buy the stock that they were betting on to go down, and of course at a extremely inflated price. But then the hedge funds have to go in, they have to jump in, and then they now have to buy the stock. And then what happens is that pushes the stock price up farther. And so right now there's this like David and Goliath story, and there's a lot of articles out about, how these retail investors are running the hedge funds and all this kind of stuff. And yes, that's partially true. And there is a part in me that loves the fact that the 99% is fucking the 1%, at least to some small amount. The problem is, you guys, is that you're also fucking 99%ers. And I said this in my video and I'm going to say it again. This is the deal. That's a bubble in the stock. I don't care how it got there. There's a bubble in the stock. If you look at the fundamentals of it, GameStop was not expected to turn a profit until like 2021 or 2023 or something like that. Now what you've done is you've taken and you've inflated it over to a high amount. Now, first of all, regulation is not far behind. Please believe that they're going to come in, and maybe the regulation they come in with is that nobody can fucking short sell at all, which I would be happy to see, because when they stopped short selling in 2008, they took a lot of the volatility out of the market that was coming up, and it was a welcome thing as far as I'm concerned. I think short selling in general is a bunch of bullshit. So a lot of the people are like, yeah, they're fucking us, so now we can fuck them. Well, the problem is you're also fucking other 99%ers who are not going to be as sophisticated. They don't understand what's really going on. They're going to go in and they're going to buy it. And now that it's over, can you look at it, what it is, GME? Can you look at what it closed at today for me, Stormy? $200 or $300 or whatever it is, people are going to be jumping in it at a high price. And then when that bubble bursts, they are going to lose their fucking ass.
193.60.
193?
Previous close 346.
Okay.
Down $152.
So previous close was $346. It closed today at what?
193.
193. Okay, so it's already starting to pull back. And so the thing is that as this thing is
That
moving,
is correct.
Yeah. So as this thing is moving up, if you have the people that were in at the very beginning, of course they're going to be able to take profit off of the inaccuracies in the market, right? But the thing is that on top of that, there's been a lot of other people that are going to be jumping in because they don't understand. They think that there's some kind of new thing happening, and the bottom line is that the stock does not have the fundamental value. It is immensely overvalued, which is the reason why I think that regulations are going to come in and going to kibosh the whole fucking thing in the first place. And what the reason why I'm so nervous about this is because not only are you guys creating artificial bubbles, but on top of that, you need to know if shit goes sideways, the bailout is not coming for you. The bailout is not coming for you guys. The bailout is coming for the businesses. We've seen it time and time again. We've seen in 2008 when the banking systems almost broke our entire fucking system and they got bailed out from the government. And we're going to talk a little bit here as I start comparing Bitcoin to the gold standard about how they still do it in a way that with the new way that they process money, and we'll talk about that in the banking system. And so this is what I'm really nervous about. And now they're turning to AMC, and now they're turning into at American Airlines, and all they're going to do is they're going to hit sectors that COVID has really fucked up that have been immensely short. And at some point, you guys, the hedge funds are just going to either stop shorting, which I would prefer, or they're going to be more. They're going to do something different. So there's a lid to this, you guys. It's not like the hedge fund's going to be like, oh, this happened. Well, let's just keep fucking short and shit. No. And so this is why you guys got to be really careful. And I get so frustrated, as I have many times before. I don't want people to fuck themselves and lose their life savings. That is what my concern is. That is my 2 cents on GameStop and AMC and American Airlines. And people are arguing with me, and that's fine. You can fucking argue with me all you want to, but I've seen it. I've seen people lose their ass in Enron. I've seen all these different trends come through the market where there's some type of manipulation or there's some kind of bullshit financials out there that ends up causing a balloon in a stock, and then a person is highly concentrated in that stock, and then they end up getting fucked, and then they're the ones who have to start all over. And the hedge fund people, that's one position, y'all. They're keep on keeping on. So that's what I got to say on that. Do you guys have anything to add?
So I'm going to go back to GameStop really quick because it looks like after hours trading, they're up at 137. So it looks like they're at 331 in after hours, 330 at after hours trading. So it's a roller coaster ride.
Yeah, and the deal is that if you have people who are talking about, I don't want to invest in the market because it's risky, but I'm going to buy GameStop. Are you fucking for real?
Hey, let me share this with you. So for GameStop today, they opened at 265.
Mm-hmm.
They had a high of 483
Jesus.
And a low of 112 today.
Yeah. So this is why I keep preaching to people that it's objective over product, and that you can't say in one breath that you're scared to invest, and then at the same breath have a conversation about GameStop. You can't do it. That's standard deviation. It's all over the fucking place. And you guys got to remember that who else you're making rich through all of this? The fucking CEOs of GameStop, you guys. Who do you think the largest holders of those shares are? It's not even the hedge funds, y'all. It's the fucking CEOs. So if the CEOs were in any type of process to try to turn around GameStop, you know what? If I'm a CEO and I see that shit's going downhill anyway, and then all of a sudden my fucking stock jumped up to some crazy ass amount, guess what, bitch? I'm selling that. I'm fucking out. I got a golden parachute. I'm going to go on to the next CEO position. And so these are the ramifications that happen when stuff like this happens. And it infuriates me because people they get so hung up on this new trend and they fuck themselves because they are not within their risk tolerance. And I've seen it too many times. So, and after hours trading, you guys, that's even worse. Like, that's even more like the fucking wild, wild west. Any stock typically can have wild swings in after hour trading, but you take a stock like this, that's this much volatility, even in market hours and then after hours. Oh, come on, you guys, you're fucking killing me, man. Anything else to add to that?
Not me. I did
go get some.
I posted an article for any of you that are interested. I just posted an article about it today on our Finances, the Other F Word Facebook page. So
yeah, and if I sound like a bitch, sorry, not sorry.
You know what? Let me ask you a question though. Let me ask you a question because you do sound like a bitch. But let me ask you a question there. The hedge fund people. So it looks like if you look at GameStop's value, it looks like their stock should have been priced at like $20 to $30 price point. But the hedge fund people were like driving it down because they basically wanted to bankrupt the freaking company so they make a lot of money. So this group of like regular people got together and they're like, screw them. They're running this company out of business. We're going to go and we're going to change that around because the stock was grossly undervalued. Now, I still think GameStop is dead man walking, but isn't that like a noble thing to do, to say, hey, we're going to drive it back up? But I guess once the momentum started, it's gotten a little wacky and crazy. But they really did stick it to these hedge funds. I think there was something out there that says every time it goes up by $7, the hedge funds that stayed in lost like $1 billion.
Yeah, I don't know about that part, but they didn't bankrupt GameStop. What they were doing is they were fucking the little man. That's why there's this, David and Goliath with the 99% getting over on the hedge funds. So the thing is that this is what typically happens. If you have let's say none of this shit happened and you have GameStop, yes, are the hedge funds, in my opinion, in the wrong for shorting the position and driving the stock down further, especially when there's other people that hold it? Absolutely no question about it, right? The problem is that what can happen a lot of times is if you have a company that in GameStop is not in bankruptcy. So if you have a company...
No. They wanted to drive it into bankruptcy.
But the stock price isn't going to drive it into bankruptcy. That has nothing to do with it. Once the stock is sold, the person who gets fucked by the loss is the person who's holding it. So they're not hurting GameStop by driving down the prices. They're not making it look too good. But the only way that GameStop would be able to take advantage of any of this is if they issued more shares of stocks, which typically people wouldn't buy. So they're not going to drive they weren't going after GameStop. They were taking advantage of an inaccuracy in the market, and it was affecting the people like everybody on this podcast and everybody who listens to this podcast probably who's actually holding it. That's the people who they were fucking. But even within that, there's a certain amount of space that they have wiggle room. Now, the thing is that now you have a super overinflation of the value of it. And so now what you've done is you've taken GameStop out of any chance of merger or acquisition. Because what typically happens is if, and I need to fucking do a video on this, I might chop this up and put this on tonight. The thing is that what happens is when you have a company that is struggling, they need to either get in with the times, do something different, change out CEOs, start closing shit, start trying to make their company better, so that if they don't go bankrupt and end up losing their ass, what they do is they are a prime target for a merger and acquisition. And then what happens is that the people who are holding the stock that have lost some of their ass, they hold out and they wait for a merger and acquisition to come in. And then those people come in and they go, hey, your stock is worth $20. We're going to buy GameStop, whoever this other company is, and we're going to pay you $25 for it or $22 for it, or we're going to give you new stock in the new company or something like that. And then what ends up happening is that there's a little bit of saving grace. But now what they've done is they've taken a company that's in the shitter, they've overinflated the value so high that it's not even available to have a merger or acquisition, which is further hurting the 99%. You guys dig me? So that's the fucking problem, is that it's not sticking it to the man. It's fucking everybody, even the people that you say that you're doing the rallying cry for. That's my problem. So
isn't the hedge fund the man?
The hedge fund is the man.
The hedge fund manager,
but
isn't
when
that
you
the man?
but when you start fucking, not the hedge fund manager, because it's not all his money, but the hedge fund in general.
The hedge fund's the man.
Yeah, but then what happens is if you're trying to take out the man and try to defend the 99%, but you end up fucking the 99% at the same time. But what happens is greed comes into the picture, which I see in my industry all the fucking time, which is why I've seen this happen so many times. Greed comes into the picture, and then shit just fucking changes, and it changes for ones and 99%. And that, it just bothers me, because when you're doing something that's going to fuck people, I have a problem with that. I have a fucking problem with that a lot. So I've been going back and forth on how I feel about the GameStop thing, and I see the ripple effects that could come from it. And you know what? Enjoy it while it lasts, guys, because I'm telling you, regulation is coming and they're going to knock that shit off. My hope is that nobody can short. That's what my hope is. So with that being said, last call for GameStop before we get into Bitcoin. Okay, so I've been getting a fuck ton of questions on cryptocurrency and Bitcoin, and I have not wanted to do it, quite frankly, because it's just not a subject that I've ever been interested in. And I hope by the end of this series, I've actually proved myself wrong, because that would be pretty fucking cool, because I love when I do that. There is a podcast that Stormy actually that had just dropped as another podcast that he listens to. What's the name of that podcast, babe?
Acquired.
So So Acquired did a whole episode on Bitcoin that is over like 3 hours and something. They go very technical. They're kind of a technical / money podcast. I listened to a good portion of it when I was trying to figure out how to approach this episode. And at one point I was just like, fuck, I guess the episode's going to be me going, hey, there's this great podcast called Acquired and they have a thing on Bitcoin and you should go and listen to it. Thank you. Good night. We're done. But as I was starting to get into it and doing a little bit of research, I have kind of a different approach to it. But I do encourage you guys to go find that podcast. I will put the link in the show notes. So we're going to do Bitcoin, finance is the other F word style, but just know that other podcast is out there. So here we go. Okay, so obviously Bitcoin is a digital currency. I'm going to give you just a little bit of background. Some of you guys might already know this, and if you do, well, you know what? You're going to just have to wait because I have to go through it anyway for people who don't. So Bitcoin is a digital currency created in January of 2009 by a mysterious figure or figures called Satoshi Nakamoto. He wrote a white paper. White paper is basically a paper that advocates a certain position or tries to express the best solution of moving forward with something. So a lot of times if I'm doing investments, I might talk to a wholesaler and say, give me the white paper on the investment so I can look it over, et cetera, et cetera. And it is designed to influence the decision maker one way or another. That's just what a white paper is. And basically, how they created who created the actual technology is still a mystery. And Bitcoin is a decentralized authority, which just basically means that the currency is not governed by a governmental body, which is good and bad, which we'll talk about in a minute. So instead of going through like a financial third party, it goes through just peer-to-peer. So basically, I send my money straight to Stormy and there's no transaction fees. And that, along with the autonomy of the whole process, was one of the things that made it very appealing from the very beginning. Obviously, Bitcoin is used in virtual markets, but kind of a more tangible explanation of something that's decentralized would be like selling real estate and just having a buyer and a seller. And so it doesn't go through kind of an intermediary. Bleh. Okay. So advantages of a decentralized currency, there is less sharing of personal data. So you don't have to give your debit card out. You don't have to give your account number out. There's a public token and a private token. The Acquired podcast goes into this in great detail. For the purposes of our podcast, I'm not going to go into that because they're more of a, literally from the ground up, all of the intricate details. I'm trying to give you guys a broad financial overview. They have no oversight by governmental authorities. And as I'm sure Stormy will mention at some point, there was the Silk Road, which basically people were selling drugs and doing all kind of illicit shit. So that is the origins of Bitcoin. And they bypassed the financial institutions, therefore eliminating the transactional fees, again, which was part of the big, hubbub over Bitcoin in the beginning. The disadvantages of a decentralized currency is that there is no oversight by government authorities. So that's a good and a bad. There is no legal framework to be protected because there is no governing body of it. If issues arise, like we will talk about later in this series, where your Bitcoin is sent erroneously to another account, that's it, y'all. It's gone. And this is something that if we get to it today, we will. If not, we'll pick this up on the second part of this series. All the currency is held on private servers. So basically, if you lose your personal key or you can't find your hard drive or your hard drive gets destroyed and your Bitcoin was on Bitcoin, that's weird. That was weird. Your Bitcoin was on it. Wow, I can't talk. Your Bitcoin was on it, then basically you just lost it. And so the deal with Bitcoin is that there is a 20 million Bitcoin threshold, and we are approaching it within $3 million of it, but not until like 21 something, and I'll get to that information.
3 million coins of it, not dollars of it.
Oh, did I say dollars? Of course I have it. Yep, so 3 million coins of it. And so we're going to talk a lot about the gold standard and how it kind of crosses over to Bitcoin. And the episode I'm referring to is in season 2, episode 42, and it was called The Gold Standard. And we talked a lot about how the gold standard worked. So let's do this. So Bitcoin is created when you have miners. So you have, the blockchain, which is for those of you who used to have checkbooks. They're registers of everything going in and out of your checkbook. And basically, what happens is that these people would invent, they would create new Bitcoin or put new Bitcoin into the series, into the atmosphere by mining to make sure that all of these transactions were in fact accurate. So everybody would know that, yes, this is accurate. And then you'd have to go through the blockchain to find out how much everybody has in balance, et cetera, et cetera. And so these miners would come in, they would mine it, and then they would get paid in Bitcoin. And so that would thus put more Bitcoin into the system. So because of that, over each 4 years, the amount of money that the miners have gotten paid has been decreased by 50% as it moves through. And of course, this is getting harder and harder because you have more and more blocks that have been added to the technology, and it makes it a little bit harder to do the mining, and it takes a whole bunch of computing power. And to the best of my knowledge, unless Stormy knows somebody, we don't even really know who the fuck the miners are. Am I incorrect on that, Stormy?
No, that's not correct. So no one advertises that they're miners, but you can set up a data center and start mining, because really what the miner does is it's just validating the data. They're just validating the data.
Right.
You do so much validation, you get a coin.
Right, but my question is, who are the miners though?
But they can't compete today.
Yeah, so
anybody can be. You can be, if you had a power of a computer, you could be a miner.
Right, but I think there's only
people. It's not like there's a consortium of.
But I think there's only 6 major miners. There's like 6 miners at this point, right?
I've never heard that.
Okay, so
I know when Bitcoin first started, one of my employees turned one of my computers into a mining computer. And I know other people who mine, but I don't know how successful they are today, because when they were able to do it with 1 or 2 computers, now it's getting pretty sophisticated where people have warehouses full of computers mining.
Right. So anyway, so we have people who mine it, and that's how they create Bitcoin. So now let's go ahead and parallel this over to something that we're more familiar with, and this is US dollars. Now, the Federal Reserve also creates dollars. Okay, so you've heard the term a whole bunch of times about, they're just up there printing money. Well, they don't really print money anymore because people don't really carry around a lot of paper currency. And so what happens is that they control the money supply by doing a couple different things. It used to be back in the day that the dollar was pegged to gold, and it was called us being on the gold standard. And so for every dollar that was in circulation, they had to have in a vault about 40 cents worth of gold. And that was being on the gold standard. But then what ended up happening is in the 1920s, we went off the cliff in 1929. We hit the Great Depression, and people who had gold started hoarding it. And when they were hoarding their gold, they literally, in essence, sucked the money supply right out of the economy. And this is what started our move to a fiat currency. A fiat currency is what most every other country is on. It is not pegged to a commodity, which means it floats. It is traded, or it has a value based on perceived value between each country, between people of that country, and it's usually linked to a variety of different things, but it is not a hard and fast gold standard rule. We started to come off of it as part of the New Deal with FDR, and then in 1970 something, we covered it in the decade of the 70s, we came completely off the gold standard and we became completely fiat. And so when the Fed creates money, as Bitcoin creates money by mining, they purchase securities. So for the last year, the Fed has been purchasing corporate bonds to prop up the corporate bond market, along with some other different things they do. One of the other things is that they can buy and sell its own securities. So this is the crazy part. The Fed issues treasuries or buys their own treasuries back. But the thing that's so fucking crazy out of all of it is that, for as crazy as this sounds, it's actually a better control on inflation than it was on the gold standard, which is nuts. So we're going to talk about that in a minute too. And then here goes back to the big banking systems that I touched on earlier, which drives me crazy, is that, it used to be when it was paper dollars that they took the paper dollars and the Fed ran it through a government agency to get the dollars out there in circulation. But now with everything going digital, what the Fed just does is it goes to banks such as Goldman Sachs, Wells Fargo, and Morgan Stanley, and they just go bloop, bloop, and they just say, okay, we're going to give you this much money, now go lend it, right? So we've talked 1,000 times on this podcast about if the Fed wants to inject capital into the market to prop it up, they're going to lower rates. And if they need to pull it out to slow the market down, the economy down, they're going to go ahead and they're going to pull it out. And so what happens is that they sit there and they just go boop, boop, and they put this money in their reserve, and then they're supposed to go out and lend it. This is the reason why this pisses me off, because in 2008, when the big banking system almost drove us off the fucking cliff, these bastards got pumped with so much cash and they sat on it. And the whole reason why they got pumped with cash is because they were supposed to be lending it out to people to help people in their time of need. And instead, these fuckers got rich and sat on all this money, then got a fucking bailout on top of it. Wells Fargo also got a bailout. And they were forced to take the money, and they did pay it back. And as a matter of fact, I think Goldman Sachs, I don't remember if Goldman Sachs and Morgan Stanley took money. But the banks that did take the money, I believe it was paid back, and that's something that I did not research because that's just something I thought of right this second as I'm talking. But this is the thing that's fucked up, is that the Fed is going to go in and they're going to go bloop bloop into an account, and then they're going to say go lend that money out, and then what happens is that the bank makes a spread on that. So they're getting extra money to go put it into the economy. But since the old way that the government used to do it is now gone, then the bank turns around and takes the money that was basically given to them, bloop, bloop, digitally, and puts it out there and then charges you an interest rate for it. And there's something about that is fundamentally fucked up, in my opinion. And I don't know if that's just me. You guys' thoughts? Anything?
I like it.
You like it? Okay.
No, it's definitely, there's definitely something wrong with it.
Yeah. I mean, the thing is that and then you get a bailout. Fuck you guys, man. Fuck you. This is why I'm so concerned with what's going on with GameStop, because you guys aren't going to get bailed out, but these other fuckers will. And I'm tired of seeing the 99% get the short end of the stick. And so what happens is that when you have a fiat currency, as I just talked about, the two parties have to agree on the actual value of it, much like a Bitcoin kind of works. So now, we've come off the gold standard, and one of the reasons why we came off the gold standard is because there was only a finite amount of money. So if you have one country who's trying to pay another country for some reason, and they ship gold across the Atlantic, and the fucking boat sinks, well, guess what? All of that gold is taken out of the ecosystem of the cash ecosystem, and it's sunk at the bottom of the ocean. Or what happens if another country happens to hit a massive gold mine that they didn't know was there? Now there's a big money chain is awash with gold, and then what happens is it also can tip the price of the commodity. And so because of this finite nature and because of all these different things, we went off of the gold standard and we moved into the fiat currency. And so when we're talking about like gold sinking in a boat, we're talking about all of those Bitcoins that are kind of lost to the ages now. And so for me, when I look at Bitcoin, I'm not super sexied on the technology. I think it's pretty amazing. I'm more concerned with the fact that I see how it's looking more and more like the issues that we had when we were on the gold standard. And of course, as everybody knows who's listened to this podcast or listened to any of my videos, I have a big concern with the growing gap between the 1% and the 99%. If you have Bitcoin, at some point when it becomes finite, you're going to have hoarders of the Bitcoin. And then what's going to happen is that there's not going to be money circulating anymore. There's not going to be any more Bitcoin that's going to be created. So one of the things that was thrown around is that would they end up having to charge transaction fees when they send money between each other because they have to try to keep generating the money? I don't know. The bottom line is that there's approximately 3 million more Bitcoin that can be mined, and it is not expected to be fully mined until 2140. So we will all be dead and gone by then. So we won't have to worry about that part. Currently, like I said, we have about 18.5 million Bitcoin that has been mined. It leaves about 3 million left, and they are expecting that to be fully mined by 2140. And what we have is that now we have a whole bunch of alternative currencies that are popping up. And so this is the thing, is that when, the Sashimoto guy, when he did his first mining, where he basically did the transaction and then verified that the transaction was right, he created it out of nothing. Nothing. So there was this old documentary that I watched where there was an artist and he had a piece of paper that was the size of like a $10 bill. He went into a diner and he drew this. They were talking about the frailty of money. And he drew this really elaborate, beautiful picture on this piece of paper. And then he put like a tin with a little dollar sign on it. And he asked the waitress, and this was probably set up for the show, but he asked the waitress, hey, will you take this in place of an actual $10 because it was so beautiful? And she said yes. And he said, okay, then you do understand that you have to give me back cash in dollars. And that was the exchange. The point it was trying to prove is that it's a perceived value. And so what happens is that we have Bitcoin literally over $30 or $32,000 a Bitcoin right now based on nothing. And now there is a perceived value of $32,000 or whatever it is it's trading at right now. And that is a concern of me. And what's starting to happen is that we start to see all these other cryptocurrencies that are coming online that aren't based on anything. Now, the deal with the dollar, at one time it was backed by the gold standard. And then after that, it's backed by the taxing power basically of the United States. I mean, that's what you're doing when you're trusting the government that they're going to be able to manage it and that they're going to be able to tax people to keep whatever operations that they need afloat. And so this is the stuff that is concerning with me as I see more and more of these cryptocurrencies come online. And, when we went through when we had the 13 colonies, Zoe's people might remember that, when we had the 13 colonies, everybody had their own dollars, right? And so there was a whole big fucking problem. And what ended up happening is they came and they said, okay, fuck this shit. We're going to make the Federal Reserve because there's too much stuff. This colony's currency is worth more than this, but it always changes. Plus the banking system was non-existent back then. And so what they did was they consolidated it all and they put us on one currency, and that is the US dollar that we have. The Eurozone did something similar as well with the countries that are in the Eurozone. And the reason why they did it is because it was too hard for people to travel through country. That was kind of a matter of convenience, okay? But when you're talking about having all of these different cryptocurrencies come online, I don't understand what the purpose it's going to serve except for people to get on and try to make their, couple $1 million, which, I mean, if you do, good on you, right? But I mean, the thing is that there's no teeth behind it, and it is a perceived value. And if at any time it becomes that the perceived value is less, there's not any taxing authority that's going to come in and take care of this. And so that ends part one of what I have. And then the next time we talk about, we're basically going to talk about the exchange and how you sell your Bitcoin. And Coinbank just announced today that they were Is it Coinbase? I thought it was Coinbank. Coinbase? Okay. So Coinbase just announced today that they're going to go the route of Spotify, where anytime you're trying to get cash from Wall Street, you can go through an initial public offering, which we've talked about on this podcast a ton of times, and you need an underwriter in order to do that, and they need to look at a variety of different things, and then they tell you how much they think that they can price the stock for, and in there's usually what's called a green shoe option. I'm going to touch on that in 1 second, and then, of course, the person who's trying to go public has to pay a fuck ton of money to the underwriter to underwrite the issue, and then it goes public as an IPO to the street, but only through certain people, typically the underwriters or people that brokers that have a special deal to be able the first ones to sell the IPO. So then what Coinbase has said is that they have came out now and they've said, we're going to do what Spotify did and we're going to go directly to Wall Street. So we're just going to say, hey, we have, these amount of shares and this is how much they're priced at, and just, come at us and we're going to go ahead and we're going to do it that way, which on one hand seems really awesome because they don't have to end up diluting their shares, nor do they have to end up paying a lot of fees in underwriting. And I'm digging it. I'm for that part. The deal is that when you have an underwriting, a green shoe option that's in an underwriting process, if you see that the stock starts tipping right when it's sold, or if they need to kind of like take some of the volatility out of it, the green shoe option allows them to go ahead and release more of the initial public offerings than they originally did, and it's a way to kind of give them a tool to kind of smooth it out. That's the one bad thing about doing it direct, is that, you can have very erratic movements within the stock price. And so I don't really have an opinion on that either way. That's just something that more and more companies seem to be shifting to, which of course is because of company greed. And so that's going to be what we're going to be talking about on the second part of the series. And then we will move forward from there. Anything?
Works for me.
I have a little cautionary tale from the UK that I wanted to share with you, unless Stormy has something else to.
I like cautionary tales from the UK.
Well, we're full of them. We are a cautionary tale in many, many ways. But I'm just going to shut my door because my child has just walked in and left it open and there's lots of background noise. My child is a cautionary tale. Thank you. There we go. So yeah, I posted this story on the Finance the Other F Word Facebook a few days ago, I think. And it's about a guy in the UK, in Wales, actually. So who had 2 hard drives that looked the same, and he accidentally threw the wrong one away, and the one he threw away contained all his Bitcoin, 200 million pounds worth of Bitcoin, which is about $275 million right now.
Oh, that hurts my fucking soul.
Can you imagine?
Yeah.
And he's just a normal, everyday guy. He's in fact, I think he's an IT engineer or something. James Howells, 35, works as an IT engineer. He did this back in 2013, by the way, and ever since he has been fighting with his local council so it ended up in the landfill site. So ever since then, he's been fighting with his local council to let him dig through the landfill site, because he's managed to work out, about where it would be. And they won't let him. And now he has the backing of a hedge fund who has agreed to back him and offer the council £50 million to let him, £50 million, to let him do that. And they still won't let him do it. So
wow, what a council!
What can the council possibly have a problem with that happening? Because they're trying to get that shit themselves, or what?
No, they wouldn't have the password. They wouldn't have the token to get it anyway. They're just being assholes.
Well, what they're saying is it's against licensing regulations, and it could cause environmental damage for him to go digging around in a landfill site. So he is down 200 million pounds. Wah, wah, wah.
See, and I get so nervous about this, you guys, because at our branch we had a security officer, coolest guy, sweetest guy ever, and he was working 3 jobs. And they used to have a fuck ton of money, and whether by his own choice or whether by the advice that was received from a financial advisor, he went all in on Enron. All in. Okay. All in. Okay. So for those of you who don't know the tale of Enron, we've actually covered it on this podcast. You guys could go back and listen to it, but basically what happened is that he was working there, and you could just tell this man had really fallen from grace, and his wife was completely pissed at him and refused to work. And basically this guy was working 3 jobs to try to get them out of the hole, because he had lost literally all of their money, which was, I could never get the exact dollar amount, but it was anywhere between the tune of $500,000 to $1 million.
Ooh, ouch.
And this guy, I would watch this man come into work every day on the bus, okay, because there was 1 car and she used it because she's punishing him, right? Because she's pissed. Mm-hmm. I mean, I don't know why they even stayed married at this point, but and I mean, honestly, Jesus Christ, So he would ride the bus. He would come in. He would be so tired that he would be falling asleep standing up. And this is the stories that I see all the time. And this is why when I see people get all fucking hot and bothered over shit that is clear manipulation in the market, and then they go all in and they risk everything they have, I see nothing but cautionary tale after cautionary tale that happens over and over and over again. It happens a lot, you guys. And so I know that my opinion on GameStop, and probably a lot of my stuff that I have an opinion on, is not going to be what people want to hear. And I know a lot of you aren't going to agree with me. Okay, don't agree with me. But I'm telling you that I sit across the desk from people that I've seen blow up and implode by doing all the fucking shit that people are doing now. And it breaks my fucking heart. Because again, the 1% will walk away unscathed. But the 99% is going to get fucked. And it terrifies me. So with that enlightening note, are we out?
Peace out, motherfuckers.
Oh, Jesus Christ. All right. We love you guys. Thank you for listening. We appreciate it. We'll catch you on the next episode on Bitcoin Part 2. Goodbye.
Especially Pauline K.
Especially Pauline K.
Yeah, Pauline K.
Yeah. Oh, there you go. You got a kiss from Stormy. That was
Ooh, you're so lucky.
You're so lucky.
But
Yeah.
wash your mouth out afterwards.
Yeah, exactly. You just don't know. But okay, we're out this bitch. Bye.
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 Thanks for listening. If you like us, subscribe wherever you get your podcasts.